I'm just going to start with introducing who we've got on the session today. So you've got myself, I'm Danielle. I've been a client success manager at GoProposal for 2 years. And then we've also got Karen Eckstein, who is our resident risk management expert. So the reason today has even come about, there was a lot of traction in the GoProposal community around refund policies. Karen, I know you were asking this question, and a lot of people were asking if it's best practice to have a refund policy in your engagement letter or on your website prior to going and engaging a client. Now, I spoke to Karen Eckstein about this, and she was telling me that actually it's not best practice to do this, and she's going to go into the reasons for that in a short while. But what this whole refund policy conversation sparked was just a wider conversation with Karen, really, on the other small ways firms can often expose themselves to risk. And it was really interesting because after speaking with Karen, the Karen that's on the webinar today, she was telling me that it's often the small things or the day-to-day processes that people can get wrong. So rather than just get you on a webinar and we'll talk about refund policies, we'll talk about that. But we thought it'd also be really useful to just give you guys the know of, what you can do to prevent a claim, how you can manage risk. And that's what Karen's going to talk to us about today, really. And now, in terms of what we're going to run through on the session, so we've got an introduction to Karen Eckstein. I'm going to let her talk to you about her experience, her background, and what she can help you with. We're going to talk about that question, so why you shouldn't have a refund policy in your engagement letters or on your website, and why that's actually potentially a dangerous thing to do. We're going to talk about the importance of risk management for you, but also your team as well. A lot of people forget that it's actually a very important thing to have in place for the staff, as well as the leads of the business and the business itself. Karen's going to explain the hidden costs of a claim. And then we're going to move on to some of the protections you've got in our OverSuite product. So for those of you that don't know or aren't with GoProposal, OverSuite is our automated engagement letter solution. And we'll move on to what that is later. But we're going to talk a little bit about how that goes a long way to protecting you with some of these issues above. But what Karen's also going to talk to you about is having an engagement letter isn't enough. So even if you've got the best engagement letter in the world, you still want to get your processes right, and you still want to get a lot of things right. And that's what Karen's going to talk to you about after that. And then just some processes and systems that you want to get in place. And then, as I said, at the end, we've got the Q&A. So if you drop your messages in the Q&A box, what we'll do is at the end, Karen's going to speak for about an hour. We'll run through everyone's questions at the end and make sure that everybody's got their answers, so we don't have to stop at 11:30. There's plenty of time for us to make sure we answer all your questions. So I'm going to hand over to you now, Karen. Take the road. And
right.
Yeah.
Okay, thanks, Danielle. And we will be sending you some material afterwards. So as well as this information in this webinar, you will get some hard copy or email copy. Yeah, so before I go into the refund policy, just a little bit about me so you know who I am. In my background, I spent 30 years. I always say I started when I was 5 because I'm in great denial about my advancing years. I spent 30 years defending accountants, solicitors, tax advisors, defending them against claims against them. I am a CTA as well as a solicitor, so I do understand what the day job is. And I realised over that time that the majority of claims, on average about 85% of the claims, came not from getting the difficult bit, the tax law, wrong, but from getting the basics wrong. And I got increasingly frustrated that I would spend all this time, and it's really intense and expensive when you've got a claim, sorting out the claim, getting to know the firm really well, and then moving on, when you could see the tipping point and you could see when something simple could have been done to prevent it all going wrong. And so in that 30-year period, I spent more and more time writing articles and doing lectures and webinars, trying to help people prevent things going wrong. Ended up writing a book on risk management, and I ended up doing the Institute of Risk Management exam, so that I had the theory as well as the practical experience on risk management. And in the end, a year ago, I set up my own practice, focusing solely on preventing things going wrong. So I've gone from poacher to gamekeeper, if you like. So instead of sorting out the messes after the event, although I still do some of that, my focus is now on helping you run your businesses and helping you do everything to prevent things going wrong, because obviously, the old adage, a stitch in time saves nine. So that's my passion, and that's who I am, and that's why I'm so keen to help you do the little things that prevent the big problems. So as Danielle said, we were having this discussion about why you shouldn't have a refund policy in your engagement letters, and it was a conscious decision that we didn't put this into OverSuite, and it's because if a client terminates a contract with you early, there could be a variety of reasons why they terminate with you early. So maybe they've engaged with you to do a contract for a year, and they've agreed to pay you in 12 monthly installments for that contract. And it might be that they're going to have their annual accounts at the end of the year. So they might terminate after 4 months. So they've paid you 4 monthly installments. Now you've incurred some fees in taking them on, and you've started doing some of the work. You might have done 6 months work of cost in that 4-month period. So why have they terminated? Have they terminated because they've got cash flow issues? That's not your fault. Have they terminated because they found a cheaper accountant? That's not your fault. Have they terminated because they've moved location and you're not convenient? That's not your fault. Have they terminated because they've fallen out with you? And is that a falling out your fault? Have they terminated because you're not doing a good job? That's your fault. So there are a variety of reasons why they might terminate. Though that reason will vary. So if you have given the client a contractual right to terminate, you're paying them back effectively the money that they've paid you because they haven't had the goods. So if they had agreed to buy a shirt off you that you were making, or a jacket that you were making, and they were paying you in monthly installments, and you gave them those monthly installments back because they hadn't got the product, you'd still incurred the cost. So why should they have that money back just because they have terminated? If they've terminated because it's their choice and it's not your fault, you've incurred cost. They have contractually entered into this contract with you for the 12-month period. So actually they're obliged to pay you for the full 12 months, not just the 4 months that they've been with you. Some of those circumstances might warrant that you decide you are going to pay them back some money, or you might decide that you're going to let them off the remainder of the contract. Some of those circumstances wouldn't. But if you are going to decide to rebate, you need to be free to make that decision. If it's in the contract, then you are actually damaging your business. Because if that client is 50-50 whether they're going to move, but they know they're going to get money back if they decide to leave, then you're encouraging them to leave. So you are losing business. If it's not in the contract and they decide to leave, and you decide out of your that you are going to rebate them, then you're actually generating goodwill. If, however, they are leaving because they're falling out with you, you have to get your insurer's consent before you rebate those fees. And if you rebate without your insurer's consent, you are damaging your insurance policy. So there are so many factors that you need to take into account that having that refund policy in your engagement letter is damaging to your business, to your reputation, potentially to your insurance policy. So for those reasons, it's deliberately not in there. It means that if you choose to rebate, you are actually giving your client a bonus, because if it's in there and you give the client the money back, they're not grateful to you because they're entitled to it. If you choose to give it to them and it's not in the contract, it's a bonus to them, so it's goodwill. So why actually make life hard for yourself?
Yeah, and just on that, if the client makes a complaint and they're not happy with the service, I'd imagine your complaints policy would deal with that. So we don't actually need to worry about the refund policy. There's a complaints procedure in place if they are disengaging for that reason.
Yeah. And again, you need to think about your insurance policy. So actually having a refund policy, you're encouraging your client to leave. You're missing an opportunity to generate goodwill, and you're potentially damaging your insurance policy.
Yeah, brilliant.
So moving on, why is risk management important? We'll talk about the cost of a claim in a minute, but we're in a very hard PI market. It's here to stay for a long time. When you talk to brokers, the optimistic brokers think it's going to be 2 years before it gets better. More realistic brokers say it's 5 years. So those of you that have renewed will have seen your premiums go up by between 20 and 40%, possibly more. Those of you that are going to renew, that be prepared for that. When you're budgeting, be prepared for that. So why is that? Well, insurers have a very limited appetite for accountancy and tax risks. And one of the reasons for that is that they base their calculations on certainty. And the way that HMRC have acted with retrospective, effectively, legislation means that they can't be certain. So what was acceptable tax planning is now deemed tax avoidance, and clients are making claims as a result. So insurers don't like that. So they're very wary of anything to do with tax. And insurers think accountants tax. So anything that you do makes them wary. So they are wary of accountancy and tax people. You probably don't all understand how insurers operate. They don't make a profit on your premium. They expect the whole of the premium to go on the running of the book, so on claims and the running of the policy. How they make their profit historically is they invest the premium, and then they make their profit on the return on the investment. But as we all know, returns on investments are currently very low. So they're not making the profit they used to make. And then Grenfell's had a huge impact on the whole of the insurance market. So that's impacted on premiums on the insurance market generally. And you might not believe this, but accountants' PI historically has been underpriced. So if you were an accountant, the cost of your premium compared to that of a solicitor or an architect would be typically half the price or less. So there's a rebalancing going on. So that's where I say, even taking into account any claims that you might have had, your premiums will be going up. So I'm sorry to be the bearer of bad news, but that's the situation. Yes, they should be using GoProposal for pricing. I like that comment. So that's one aspect that you need to be aware of, that it's a horrible market at the moment. Insurers don't spend very long on reading your proposal form. An insurer will be looking at proposal forms from accountants, architects, surveyors, marine, aviation, anything. So they're not experts in your field. And they might spend a maximum of 5 or 10 minutes looking at your proposal form. So they've got a limited amount of money to spend, and they haven't got very long to spend looking at your proposal form. Any historic issues that you've got, so tax schemes is something they really don't like, but any other problem areas. So if you had a rogue partner that you've got rid of and he was doing bad work and causing claims, that could be a reason for them to decline cover. So you've got to find a way of cleaning that up. One thing I would say is prepare early for your renewal, at least 2 months, ideally 3, and don't treat it like a tick box exercise. The amount of proposal forms that I've seen that are just tick box exercises where, and this is awful for accountants, your work spread doesn't add up to 100%. Now, you, out of all professions, your work spread should add up to 100% because you should be able to count. But it's amazing how many proposals I see where they don't. But prepare early and think of it as if you're presenting a position to HMRC and you're selling your client's position to HMRC. Sell yourself to the insurer. It's really, really important. This is your one opportunity to sell yourself to the insurer, because it's very, if an insurer's got a limited amount of money to put at risk and he's got 2 piles, the good pile and the bad pile, you want to be on the good pile.
And Karen, just on that, because I did see a question in the chat earlier, if your
Yeah.
PI does expire before you can get quotes or acceptance, what are you supposed to do in that situation?
Well, normally the insurer will agree to extend the policy, while you're trying to renew, and your professional body will normally have an assigned risk pool that you'll go into. It's very expensive for you for that situation. So speak to your broker and they'll be able to keep you going. It's a sort of a crisis pot that you'll go into while you sort it out. But if you have a problem, my details are on the slides, I can put you in touch with a broker that can help you.
That's great. Can I move to the next one?
Yes, we can. Yeah.
Awesome.
So the hidden costs of a claim. This is the doom and gloom bit before we get onto the better stuff. I thought it was helpful for you to understand, and this is something that your staff need to understand. I love the picture. If you do have a claim, this is why risk management is so important. And this is what your staff really need to get. If you have a claim, these are the 7 impacts that a claim will have. The first cost is your excess, so that might be £1,000, £5,000, the first chunk of money that the claim costs. The second cost is the premium, your increase in premium. So this will apply not when the claim is paid, but when you've notified that claim to your insurers and they put a reserve on it. So if there is a claim notified to your insurers and they say, we think this is going to cost £100,000 to sort it out, and at that point, then when you renew your policy, then that will be taken into account, and that we call that the tail. That will last for several years. I've known of accountants and solicitors that their premium for future policies will have gone up, will last for 10 years or so. I'm not a broker, but I do know that lasts a long time. So your cash flow will be affected because your premium will cost a lot more going forward. The third one is one that people just don't think about, and that's the wasted fee earning time. So if you get a claim notified, so a client makes a claim, you tell insurers, then they'll appoint a solicitor, you'll have to investigate the claim, you'll have to get the documents, and a claim could be made many, many years after you did the work. So you've got to retrieve the papers, you'll have to involve your admin staff, your IT staff, they might have to recall old emails, and it's really painful getting all that information off the server, because a lot of people will change servers and systems. It's really painful getting all that old information. You'll have to investigate it. You'll have to talk to the fee earners that worked on the file. You'll have to talk to the solicitor who's dealing with the case. You might have to go to a conference with counsel. You might have to go to a mediation. You might have to go to a trial. You'll have to report to the board. There might be, it's not just you, the board will have to look at it as well, but also the staff. You'll have to talk to the staff who dealt with the case. There's a lot of people involved. Even on a straightforward case where it settles fairly quickly, you could be talking wasted fee earning time, time that you could be earning fees for other clients, or time when you're running the business, of £20,000, £100,000, depending on a more complicated case. And that's time that you can't get back and you can't charge to anyone. And then there's a time on your PII renewal, because if you've got a claim, it's going to make getting your renewal more difficult. So you'll have to spend more time on that proposal form, more time working with the broker, and that can be tens of hours, 20 hours, 30 hours. Damage to your client relationship. When I was dealing with claims, it's something I was very conscious of, to try and make sure that although the client had got an issue with you, try and maintain that relationship so you didn't lose that client. It's obviously going to be damaged. Quite often you've lost that client, and obviously if that's an important client, they might be a repeat client, that can be very expensive. Impact on staff, that's pretty significant, particularly in these days where there's a lot of remote working, because you're getting that staff member to focus on something negative. And I can't tell you how damaging it is. We're all really proud of our professional qualification and what we do. And then for somebody to say you've made a mistake, it really does affect your confidence. Even if that claim is unmeritorious, it still affects your confidence. Somebody saying you've done it wrong, it really does damage your morale and your confidence. And that staff member might feel they're being picked on, and they'll talk to other staff, and you sometimes see that ripple effect. And it might not be the staff member that's made the mistake. It might be their buddy who you really rate. And that buddy might think, actually, I don't like the fact that that buddy might think that you're picking on the staff member, and the buddy might leave. So it ripples out, and that's really damaging. And as I say, in these remote working times, that's something that really is dangerous. And then publicity. Say you have a claim in the motor industry, that client will talk to other people in the motor industry. So you might have been trying to build a client base in the motor industry, and that's just destroyed it. So very, very expensive. So that's why risk management's important. So we'll move on.
That was all really great, client, especially Karen, client, especially given that you're talking about the working from home stuff as well. I can imagine just starting out at a firm, working from home, and then if this was like one of the first things you were exposed to, I can really see the damage that would do.
Yeah.
So yeah, moving forwards to...
I do a lot of work with firms on how to try and prevent those issues and manage those issues, but it is something you need to think about. But yeah. The protections in OverSuite. So
let me just chime in just to explain what OverSuite is to anyone that doesn't know.
Oh,
and
sorry,
then I'll let Karen know. It's fine.
Yeah, so I'm so keen.
No, you've got loads to say. It's good. So really, just for anyone that isn't aware of what OverSuite is yet, because otherwise this would look like quite unfamiliar language, I appreciate. So OverSuite is GoProposal's automated engagement letter solution. So the idea behind OverSuite is it will create and adapt a set of engagement letters that are specific and bespoke to your firm. And the reason we've been able to do this is because we've worked with these experts in the area. So we've worked with Valerie Stewart, who is an expert in compliance, and she worked to create the original ACCA engagement letters, but we've created versions for all the governing bodies. And then Karen was brought into the project because we realised it wasn't quite where it needed to be from a risk perspective. So when we're thinking about liability caps and the client relationship, so we brought Karen in to really kind of seal it up and enhance it from a risk perspective, and that's what OverSuite is. I know that a lot of larger firms, they're not always fully protected, and they will hire an expert to sift through all the engagement letters, to review them regularly and make sure that that they're all good. But obviously smaller to medium-sized businesses don't always have the time or the resource to do that. So we've brought these experts in to do that for you. And Karen's going to talk about how OverSuite can protect you from these challenges now.
Right, thanks. Yeah, so we've put a lot of protections into OverSuite. So I often get brought in by firms to help them with their engagement letters in terms and conditions and the processes behind it. And so what we've done is we've put as many protections as we can into OverSuite. And so I'm just going to run you through some of the protections now. So one of them is that the retainer is clear. You need clarity as to what you're doing and what you're not doing. So that's the retainer, the agreement between you and the client. It's really important that what's going to be done by you and what's going to be done by the client and the purpose is clarified. So an example is on tax. So if the retainer just says, advising in relation to a transaction, it's not clear whether you're advising on the most tax efficient way of structuring the transaction or if you're advising on the consequences of a transaction. So that's something you need to think about, because you are the person that's deciding what the actual retainer is, what you're doing. So you do have to put some thought into the actual retainer. It's really important. It's not fair on the client because they need to know exactly what you're doing, what they're doing. So OverSuite makes it easy for you to make it clear what you're doing and what you're not doing. One of the things that we have put in is the agreed further services clause. And this is a really, really critical clause. So in addition to the retainer, the agreement clause, it says that you will do, so say you're doing the accounts for the client, it says that you'll do such additional work for the client as you may agree in writing. So this is, you might issue a new engagement letter if it's a big piece of work, But if it's a small piece of work, you can do it under this clause. And this was one that I really wanted to put in. And it's really critical because it's inevitable that when you're acting for a client, you get quite close to the client. They might phone up and ask you a quick question, but it's not the accounts that you've agreed to do under the agreement. It's a quick additional question about something else. And so you're going to answer that quick query, or your staff are going to answer that quick query, but it's not actually within that defined retainer. So without this additional clause that we've put in to protect you, you're not actually doing that within the terms of the engagement letter. So all of the protections in the engagement letter don't apply. So this clause enables you to do those additional bits of work, because what in reality, and I'm a very practical, pragmatic, down-to-earth person, in reality, you're not going to say, I can't answer that question because it's not in the engagement letter. Wait till I issue you a new engagement letter. So what I say is have this clause, but then you've actually got to have a policy. So you need to think about this. It's really important. Have a policy, train your staff, make sure they know what the retainer is, what that agreement is, and make sure they know about this additional clause. Make sure that they know how to apply it. So what I usually say to firms is have a policy where they answer that query and then they email the client afterwards to say, you've asked me this question, this is the answer I gave you, and I'm doing it under the terms of this agreed further services clause. So you've got to make sure in your firms, you have that policy, the protections in OverSuite, but you need to have a policy to make that protection work. But that's really critical.
It's a really good point there, is that you can have everything that you need, but you still need to use it.
You need to use it. But we have put that protection in. If that protection wasn't there, that piece of work would be outside the engagement letter. So you need that process to enable it. And the other thing is that enables you to charge for that additional work. So the reality is you're not going to charge for a quick phone call, but sometimes those pieces of work can be quite big, and it enables you to earn more fees. So it protects the client and it protects you because it makes it clear the basis upon which that advice is given as well. So because you actually have, if you have that policy, you actually clarify the question and the answer and as well. So it protects you, protects the client. So you do need that policy. I can't stress that enough. We've also put in there a clause about HMRC. It's called the agree. A question said, please repeat that clause. It's the agreed further services clause. I often call it an ad hoc clause. It's really, really important. I do help people with the policies on that, but hopefully on this recording and the information we give you afterwards, there's enough info about that. It's just basically making sure that people set out in writing what was said by the client, what was said back by you, and referring back to the clause. Another protection we've put in is the ability to correct HMRC errors. So those are errors in a client's reported tax position. If you don't have that clause, I'm not going to go into detail now, but you can get into all sorts of difficulties because you've got to follow PCRT, professional conduct in relation to tax. And if the client doesn't give you consent, you end up having to cease to act for the client and having all sorts of conduct issues. It's a whole can of worms. I'm not going to go into that now because you're probably going to lose a lot of money, you're going to lose your client, you're going to have conduct issues. So we've put the clause in, it prevents all those issues.
Karen, can I just ask a quick question about that clause?
You can.
Just because I'm reading what Paul Clark said in the chat, but I think this is an important question. So if you are doing payroll, for example, so something we always do at GoProposal and recommend is reviewing payroll. So the number of people on payroll change and therefore we change the fees. Are you covered in that clause to do that? Or are we expected to send a new engagement letter at that point?
It depends how you word your retainer, but if you say we are doing payroll for your staff, and you say, so that would depend on how you worded your retainer. If you said we are doing payroll for 10 staff, then if you did 11 staff, you could say under the agreed further services, we are now doing payroll for 11 staff. If you in your retainer you said we are doing payroll for your staff, and our fees will be set accordingly. So that would depend on how you worded your engagement letter.
Okay, that's great. Does that give you the answer, Paul? Just let me know.
So moving on, so I've covered the PCRT. Another protection is that we've put that clients can only rely on your advice if it's given in writing. That's really important, because if there's a dispute between you and the client as to what was said, then you're protected because you've said they can only rely on advice that's given by you in writing. That's really important. And that takes me back to the other point, because the agreed further services point, that that they have to rely on that if they want to rely on your advice, it's given in writing. So those protections come from my practical background in prevention of claims. So looking at client conduct matters, and this is the relationship between you and your client. We've put protections in the engagement letter if client provides you with information that's late or inaccurate. So one of the protections that I put in protects you is if a client misses a deadline. So tax returns is a good one here. I've put in the ability for you to say to the client that you want the tax return information by, say, November, even though the tax returns are until the end of January, because you might have hundreds of clients. So you've got to manage when you get the information. So even though the deadline isn't until January, if they don't provide it to you by the deadline you've set, then if they don't give it to you by the deadline you've set, you're not responsible if the tax return goes in late, because they don't know how you manage your work. They don't know how much work you've got. So that's a really important one. So help you manage your caseload. So that's in there. We've also put a protection in for if there's an internal dispute within the client, and that's really important because you can get into a real mess. If you've got, say, husband and wife partnership, and husband tells you A and wife tells you B, what do you do? If you've asked them a question about what a piece of income is, and they both give you different answers. So in that situation, you're caught in a trap between the various obligations that you have in your engagement. But because I put a protection in, then you don't have to do anything until they give you combined instructions. So it puts the onus back on the client. And I'm not going to go into detail as to all the problems you would get into. But that solves a big problem there for you. And I've also put protections in if the client doesn't give you any instructions or makes it difficult for you to do your job. So I've put all these protections in so that you can't, because otherwise you can't put your own interest in front of your client's interest. So I've put these in to make it obvious for you. Then moving on to liability caps, I can do your whole talk on liability caps, and if you want that, let me know. But there are some brilliant things. We've done an awful lot of work in OverSuite on liability caps. Basically, people get liability caps wrong all the time, and in a nutshell, if you get it wrong, it's struck out and you have no limit on your liability. In OverSuite, it's very, very, very difficult to get it wrong. You'd have to basically ignore the provisions in OverSuite. So this means your staff can't get it wrong. So basically, I hate liability caps that apply to a multiple of fee, because I don't think that goes to the breach and the loss that arises. The multiple of fee might go to your duty. So if a client was saying, I want you to do A, B, C, and you say, well, my fee would be X, and the client says, well, what if you only do A and B? And you say, well, my fee would be Y. But a breach of A causes a huge loss, then why would your liability cap be reduced just because your fee is reduced? So I don't think a liability cap that relates to your fee is relevant. And if you look at the legislation, I don't think it's relevant. I think that I've looked at the legislation and the liability caps and the way that they work on the information that you provide, I think protect you. And they're also good from a client relationship point of view, because if you start a relationship with the client, you say, we want to give you a good service, but if we get it wrong, we're only going to be liable for this amount of money. That's not really setting a very good relationship. So setting a liability cap where we say, we want to give you a good service, but if we get it wrong, we're going to be liable for this. And for these reasons, then it works. And also, we've also tweak the letter. So if you've discussed the liability cap with the client in advance, the letter deals with that. And if you haven't, the letter deals with that. Whereas a lot of engagement letters, they're set on the assumption you have discussed it in advance. And if you haven't, the letter fails, the cap fails. So we've done all of that. We've put some protections in relation to fees, so fees are clear. We put in the right for you to stop work if the fees haven't been paid. One of the also protections that we've put in there is the right to giving the client the right to challenge your fees within a limited time period. And that means that it should prevent fee disputes later down the line. So they've got a clear right to challenge your fees, but if they don't, then they are deemed to have agreed your fees. And that does mean that later down the line, you can say, well, you had the right to challenge them, you haven't. There's also a lot of protections in there about third parties. So we make it clear that you're not liable to third parties who see your work unless you've specifically agreed that they can do so, and they agree to be bound by your engagement letter, including all those protections. If the client sends your work to a third party, they've got to indemnify you. So if they send it to a third party without your consent, they've got to indemnify you. So that really gives you a lot of protection. If a third party provides you with information and that information is wrong, you're not liable. And if you recommend a third party and that third party makes a mistake, we've said you're not liable. So I've put as many protections in there as I can. And then looking at the end of the retainer, we've made it clear what happens at the end of the retainer in terms of papers and fees. And we've also said, which is really important, that you are going to owe no ongoing duty. You might think that's obvious. A lot of people think it's obvious, but it isn't. So we've made that clear. And so those are basically the protections that are in OverSuite. I could talk for hours about it, but I think that's probably enough.
No, that's great. And I just want to kind of reinforce people just how protected you are with it and how much work has actually gone into this, especially at Karen's end. So what we do have is every Friday we have like a group OverSuite demo that people can jump onto. Be really good just to, if anybody wants to join, there's no commitment, you just have a look at it and I'll show you these things like how we've handled the liability caps. And I did just want to touch upon how the liability caps are handled because it's incredible. So what would happen is when you create a proposal for a client, the proposal will automatically calculate the most appropriate liability cap for that client based on the nature of their business and based on the risk factors associated with the services in that proposal. And if we don't know, or if you don't know certain information, it will always aim higher, won't it, Karen? That's right. To protect
What we did was we assessed risk, and then we have looked at one of the factors is the level of your insurance, so that goes in, and then we've assessed risk, and then there is some guidance built in as well, so you have the ability to adjust the cap up, but there is a cap. It won't go above your PI cover because obviously you don't want to be going for above your PI cover because then you're personally exposed. But there's quite a clever algorithm in the background.
Yeah, lovely. Great. And I know, Laura, you've asked about the time for that OverSuite demo. We will send the link across in a minute in the chat box so you can have a look. Great. Thanks, Karen.
Right. So, but an engagement letter alone is not enough. So a lot of people come to me for advice on their engagement letters, terms and conditions, and the processes. And I say, well, if you're happy with your processes, then I think the OverSuite product's brilliant, but it isn't enough on its own. You do need to have the processes in the background. And the way I describe it is, you can have the best car in the world, but if you drive it drunk, you're going to crash. And if you drive it with the handbrake on, it's not going to perform very well. And if you let your 16-year-old drive it without lessons, he is going to crash. So an engagement letter alone is not enough. So sort of indicated some of the bits earlier, but these are some of the protections that you need. So a lot of claims arise, not relating to engagement letters, but whenever I was dealing with a claim, one of the first things I would always do is ask someone, ask the client for the engagement letter. Quite often there wouldn't be one on the file, or it wouldn't be signed, or they couldn't prove it had gone out to the client. So, you know, the best engagement letter in the world is absolutely no use if you can't prove the client's got it and agreed it. So I can give you some tips and help on how to prove your client's got it, how to prove that the client's received it and agreed it. So one tip, I'll just give you this quick tip now, is when you're sending it to the client, ask them to, if you're not getting them to sign it in person, and obviously that's not happening a lot now, is send it to them with something else and ask them to sign. And so when they do the other thing, so if it's returning a 64/8 or paying some money on account or whatever it is, if they do the other thing, then you've got some evidence that they received the engagement letter. Because if you don't get the signed engagement letter back, at least you've got an audit trail that they received the engagement letter. So best evidence is obviously the signed engagement letter, but you need an audit trail that they got and agreed the engagement letter and the terms. And you know, so that's better than nothing. But here are some other common pitfalls that don't necessarily relate to engagement letters. Missed deadlines. A lot of the work we do is deadline based, and one of the things that I recommend very strongly is that the diary system is firm wide, not individual. That's particularly a risk while people are working remotely, because if somebody's working to a deadline and you don't know that they're not at work today, particularly if they're working at home, and they miss that deadline, the firm is responsible. One of the things that can happen there is that you miss a deadline and the client is then responsible for a penalty, for example. Now, obviously, there's some protection in GoProposal and the OverSuite for the penalties for the tax returns, but if you have a firm-wide diary system, you can see what's happening. So deadlines are critical. File notes. A lack of file notes or misfiled file notes are a common cause of claims. And again, if you've got teams working across files, then that's really important that they go on the right file, because information coming into the firm is deemed relevant to the firm. So if the client tells one member of the firm something that's relevant to their tax status, for example, that's deemed knowledge to the firm. So you've got to make sure you've got a system that makes sure that that information is disseminated to the firm appropriately. And emails are a common cause of claims if they're not filed, or they're poorly drafted, or they're not supervised. Because emails are so immediate, juniors particularly have a tendency to want to be helpful and send an email, and they don't actually give them the thought that a report would have, for example. So we see a lot of claims where emails are not sent out properly, they're not approved, drafted properly, and you need to have an email policy. So again, I can help with that, and we can do some talks on that. Communication supervision. It's really important that you have a no blame culture in your firm. There was a very recent case where a solicitor felt that she couldn't own up to a mistake, so she hid it, and now she's been struck off. You've got to have this culture where you can own up to a mistake and put it right quickly, and have training and support. If the person that you have to go to when you admit a mistake is the senior partner or the person in charge of your career, you're not likely to admit it when something is starting to go wrong. You'll only admit it when it's really serious. And it's important that staff have someone to go to when they have concerns. One of the roles I perform for some firms is that friendly face, because I'm not part of the firm. I'm independent, but I'm not part of the firm. So I can help turn things round before it becomes too late. And I'm not saying it has to be me, but just think about who it should be. Should it be internal? Should it be external? But should it be the person that's in charge of that person's career? Staff need training, because it's not going to be you that's making all the mistakes. It's going to be the staff. It could be the junior person. It could be the receptionist that forgets to actually deal with that letter. That's the critical letter. It's everybody in the firm that needs training and support. So you need those systems. Engagement letter is part of the protection, but if you don't use that engagement letter properly, if the staff aren't aware of retainer creep, which is what we're talking about, where you start doing more than you should be under the terms of engagement letter, then that engagement letter falls away. So you need those systems in place to back up the protection.
What's the most common one, Karen? Are
A
these what some of
really
you see
common
the
one.
most?
Good question. Actually, this is a really, really common one, and it causes a whole heap of problems. Where you act for a company and you start to do the director's personal tax returns. I see that all the time, because you're acting for the company, that's one entity. The directors are separate entities. They need engagement letters, even if the company's going to be paying the costs, because they are separate entities. They need their own personal engagement letters, particularly because they will need cancellation notices. They'll need the consumer regulation cancellation notices. And if you don't send them those, well, that's assuming you haven't met them in person. Potentially, it's a criminal offence to fail to send those notices. But certainly, if you haven't met them in person, those engagement letters are not enforceable.
And Karen, when you say engagement letters there, are you talking specifically about the schedules? Because I know
No,
that,
no,
no,
because
it's
that
the
they
whole
are
letter.
different entities. So
Right.
the company is one legal entity, the director is a different legal entity.
And you can never address all entities
No,
in one
no,
document ever.
no, because the company is one legal person, the director is a separate individual.
So even if the company's paying for it, you
Yeah,
still need to issue that director an
yeah,
engagement letter, even if they're not paying. And you can,
yeah.
would you state that in the engagement letter? Would you say that the director's not, we know that you're not paying, that, you know, your company's paying on behalf of you? Would that need to be included?
You've got to be careful there because you're thinking about benefits in kind, etc.
Right.
So, but the whole point is that they're a separate legal entity, so they need an engagement letter because they can sue.
Mm.
So one of the protections in the OverSuite engagement letter is that you say that you're only going to sue the practice, so not the staff. Without that protection, you could sue the individual that worked on the file. So if Fred was working on the file and you didn't have that engagement letter and Fred made a mistake, Fred could be sued individually. So you do need to make sure you're protecting your staff as well. So no, you need to send an engagement letter to each director personally.
That's a really, really good point, and a good point for everyone to know, especially if they're using GoProposal. That's great. Thank you, Karen.
Yeah, I mean, there's so many protections, I couldn't mention them all, but that's another one. So these are some of the, quickly running through some of these. This is one of the checklists. You need to think about, has the engagement letter been prepared? One of the things I do is, I recommend is that when you open the file, you have a checklist to say, has the engagement letter been prepared? Has the client received it? Have they agreed it? Don't make them sequential. Issue them all at the same time, even if they're delayed. Because if the client, if you make them sequential, the engagement that's not sent out doesn't trigger the has it been received back. So I would make these triggers all happen at the same time. Does it need to be reviewed? I would also trigger review dates when you open the file. One of the things I like is to record your time, even if you're doing it on a fixed fee. And I'd record your time for a variety of reasons. One, you can see if you're doing the work profitably, because if you're not, you're losing money. But also, if you've said that you'll do the work for a fee of X, then set a fee alert at 75% of X, because you should be nearly completing the job. And if you're not, then you'll have identified that you've had retainer creep, i.e. more's developed in that job. So you can at that stage say to the client, the job's got bigger, we need to issue a new engagement letter or a new schedule of services, or the fee estimate's gone up. The client will understand because they're in the middle of it at that stage. Or you can say, well, why is there more time on the job? Is it that Fred isn't doing a very good job? We need to train him, monitor him, write off his time, get somebody more senior involved because Fred's making mistakes. You can turn it around before it's gone wrong. So that fee alert is really critical. So just because you're doing it on a fixed fee, I would say still record your time. So you still need a notional hourly rate. And you need a notional hourly rate so that when those additional queries that come in, you can charge for them. So even though you're doing it at a fixed fee, still record your time. And that helps you realise, do you need to issue a new engagement letter? But you also need to issue a new engagement letter if the status changes. So if you have a partnership that becomes a company, then that's a new entity. or if you've got the company and you start to work for the directors, or if, and this is one that a lot of professional firms don't think about, if the professional firm incorporates, they are now a new legal entity and they need to issue new engagement letters. So I've talked about, has your fee or time estimate been exceeded, and how can you identify if you need to issue a cancelable contract? Again, I help people with this. You can have a little questionnaire. It needs to be at matter level, not at client level, because you might be acting for a client in their business affairs, so an individual in their business affairs, and then they start asking you stuff about their personal affairs, and that's the trigger for the cancelable contract. So I help firms with that all the time, but that's just a little checklist that will help you. So how do you get your staff engaged? Because obviously it's the staff that are the matter. I do training on this. So risk management is obviously important for the firm. We've got that message across today, but staff need to know why it's important for them personally. And when I do training for firms, I have a scary Karen talk where I make them realize that actually it's not just about the firm wanting to save money. It's actually, it could kill their career dead, because a claim against them will obviously destroy their confidence, but obviously it also, if they're ever going for a job interview or applying for a job, it's a question that recruiters will ask. But if a complaint is made against them, then that can, they can actually have, they can be just struck off. So it's actually, and I say those things just to get them to realize it's not just about the firm, it's actually important for me as an individual. So I start that to just get them engaged, to realize that risk management's important for me as an individual. It's not just about the firm. Risk management has to be embedded. So I always say it's top down and bottom up. So it's the senior partner, it's the receptionist, everybody. It's part of your job, it's part of what you do. But it's not a big deal, if that makes sense. It's scary, but it's not a big deal. It's just practical and it's easy process. As I said at the start, if risk management has to be easy, if it's not easy to do, people will find workarounds. So I try and make risk management as easy as possible and part of just everyday life, so that you don't think about it. It's just how you work. And that's what OverSuite does. So a lot of it is in OverSuite, so that you don't have to think about that side of it. But it's not all of it. It can't be all of it, because that's just part of what you do.
That's great. And there was just a question just before about what happens if you add, so if you're just doing a P11D, do you actually need to engage someone individually for that?
Again, that comes back to what your retainer said. So, I said that you have to think about what the scope of the retainer is. When you're writing that, you need to, it depends how you word what you put in there. So that's your responsibility. So if you say, we will do X, Y, Z, including P11Ds as required, then you wouldn't need to issue it. So when you write that, you've got to put some thought into that. So you could prepare for that by saying, we will do X, Y, Z, including P11Ds as required. And then you wouldn't need to issue a new one.
Yep, makes sense. Great. Awesome.
So yeah, what risk issues? This file reviews. I'm a massive fan of file reviews. I think if you draft a file review form that looks at your processes and checks files to see are they compliant with them, and then checks to see if you're adding value, that's brilliant. Complaints and file reviews, I think they should be done quarterly, randomly. You can get your senior staff to do them, as it's a good way of training them. Don't keep them on the file, because they're not a client matter, and discuss them at partner level, board level, because they're there to identify where the processes are failing, why the departments are having issues. They're not about individuals and they're not about clients. Complaints and claims, you need to identify the difference between a complaint and a claim. And again, I can do training on that and help you with that. Fee disputes, we talked about the fact that if you refund fees, you might need insurers' consent. The other issue on a fee dispute, obviously, we've got some protection in OverSuite there in terms of the client shouldn't have a fee dispute because they've been given the right to challenge your invoice. But if you are going to settle with your client, get some legal advice, because if you're going to settle and you want them to settle in full and final of any claims you've got, there is a particular way you need to do that. If you just settle a fee dispute and you don't do it in the right way, you haven't protected yourself. And obviously, you also need to think about insurers. We talked at the start about PII, about are there historic issues in the firm. There are ways of cleaning that up by doing a review, which again, we haven't really got time to go into this now, but are there, you can get someone to independently review the cause of the historic issue, so your processes and systems, and then look at the files that are in that historic issue and analyze them to do a report which you can give to your insurers and say, yes, we had that problem, but actually it's not really worth very much. I'm doing that for a firm now where they were struggling to get cover. By the time this report is finished, they will be able to get cover. Insurers say these reports will help them get cover. The root causes of claims. I talked about if you've had a maverick partner that you've got rid of and he's caused lots of claims. The root cause of the claim was not the maverick partner, he's a symptom. The root cause is that your processes and systems weren't robust enough and you allowed him to carry on. So it's thinking a bit more deeply. And again, we can talk about that, or I can help you with that. The final point is the biggest point. Learn from your claims and your near misses. Have a look at what's gone wrong or nearly gone wrong. And if you can be honest with yourself and with your staff and say, we had this problem and it nearly went horribly wrong, but we stopped it in time. That is so valuable. One of the talks that I do regularly to my clients is I look at what's gone wrong or nearly gone wrong in the last year. And then we do a talk and we say, right, well, these are the problems we've had in the last year and this is how we've put it right. And that's so powerful. That's more powerful than anything else I've said today.
Amazing. Thank you, Karen. So we're going to move over. Firstly, thank you to everyone for joining. And I can see some of you saying thank you, and I'm glad that you got use out of it. So there will be a recording sent across in the email to everyone that registered. What we're going to do now is just go through all these questions. We've been seeing them come through. So loads of questions for Karen in the Q&A.
Yeah.
I know people have put some in the chat box. I've been trying as we go along to
Yeah.
kind of ask them, but if you have got them and you want them answered, I'd really recommend just putting them in the Q&A now to make sure we don't miss
We'll see what we can get through them.
Yeah, yeah. So really glad you've enjoyed it, guys. Anyway, I'll let Karen take over the questions now.
Right. Okay. So the first one, what happens if your PI expires? We've dealt with. The 12-month contractual basis, that's one for you, Danielle.
What's the question? Sorry, Karen, I can't see the Q&A
okay.
box.
Is the 12-month contractual basis included by default in OverSuite?
Yes. So in the engagement letter, the way that it's worded and the way that you create a proposal is very much centered around the idea that you would end the agreement at the end of the client's financial year. So it would either be 12 months if you were starting at the first month, but if their financial year was in 3 months, it would just be the end of that financial year. I hope that clarifies it.
The next question is, as a bookkeeping only service, should we get a cheaper deal on PI as we're not advising on tax or carrying out any compliance filing? You should, if you present yourself well to insurers. If you have a problem, it's probably how you're filling out your PI proposal form. If you have a problem, get in touch with me and I'll help you. But bookkeeping can cause problems, but it's not as bad as tax, which is where the biggest issues are. Patrick's obviously had a good experience on his PI. I think the one about engagement letters fitting with ICB has been answered. Can you use OverSuite without GoProposal?
Not at the moment, no, not currently, I'm afraid, but you can use them together, so definitely worth just having a look, getting on a trial.
Okay. I have a specific question about tax protection insurance. I'd like to include this in our packages as standard, but I'm concerned I could be in a situation where the tax protection insurance provider refuses a claim. Is this an issue and how does one deal with it? Yeah, I personally, this is a personal view, I'm not a big fan of tax protection insurance. There's two ways you can buy tax protection insurance. You can buy it firm-wide or client-wide, if you like, in terms of you can buy it and then any claim within the firm. Oh, they keep moving. any claim that comes up for any client is covered, or you can buy it where each client buys the policy through you. I find that the insurers do refuse claims, and then you have quite a battle. And the policies tend to be very cheap, so I'm not convinced about the cover, but they are obviously worth having in terms of you get an element of cover. What I would say is it depends on the way whether you're buying the firm-wide cover or the client pays the policy cover. So they are worth having but they're not going to cover everything. So I think if you are going to buy it for your clients or offer it to your clients, the client needs to be aware that they're not going to cover everything, or they may not cover everything. And if the insurer refuses the claim, then usually they refuse the claim because the matter was known about before the policy was purchased. And in that situation, then they're right to refuse the claim. But the cover isn't usually that extensive. If you want to know more, then give me a shout. This is one for you, Danielle. I've been using GoProposal for several years. I set up my own ICAW engagement letter. Now I have OverSuite. How do I turn my engagement letter off? If that is how do you turn your ICAW engagement letter off, I think you just have to issue new engagement letters. If it's anything else, then that would be for Danielle.
Yeah, whether that, like Karen said, I don't know if that's technical or just in general how to move across, but if it is technical, if you set your ICAEW engagement letters up in GoProposal prior to adding OverSuite, you just delete out the templates in the engagement letter suite that aren't the ICAEW ones. Hopefully you've got one of those was the answer for you there. Feel free to send a follow-up question.
Next question is, interested in some information on referrals. Some bodies allow and others don't allow referrals to IFAs. From a risk perspective, what should we consider if we choose to refer to IFAs? And is there a distinct difference between a referral and a recommendation in the event something goes wrong with the IFA and the client from a claims perspective? Yeah, referrals and recommendations. It depends whether you're getting a commission, whether you disclose that, and what you get out of it. So if what my view is, a referral to an IFA is a tricky one. And insurers are often a bit wary about this, so they'll often ask a question about it. What I would say is that I would prefer, it depends, some insurers don't like the word referral. What's the difference between a referral and a recommendation? It could be a question of semantics. If it depends what's the purpose and whether you're getting a commission. So if you are referring a client to an IFA and you're getting a commission out of that referral, then you'd have to make that very clear. What is the reason that you're making that referral or recommendation? So if it is that the client needs an IFA and says to you, do you know anybody? Then you could say, well, I know 3 IFAs that and here are their names. If it is that you are saying that here's an IFA and I get a commission, then that's more risky. Hopefully that answers the question. I don't know if OverSuite terms apply to ICAS. I haven't checked if ICAS and OverSuite are compatible.
I am 95% sure that ICAS is on there, but leave that with me. Who asked the question? Sorry, Karen.
It's an anonymous question, so
I'm almost sure it is. But if you're on the trial, when you fill out the wizard, you can see from the drop down what's available. And on the OverSuite webpage, which I can put into the chat box now, it will also bring up a list of the governing bodies that it's compatible with as well.
The question about the IFAs, the follow-up question was, what if you still get commission if you know 3 IFAs? I think it's if the client is if the client comes to you saying, I would like, do you know any IFAs? And you say, I know 3, but I'll get a commission. that's fine. If you are, if you are proactively telling the client to go to an IFA unprompted, it's less fine. Does that make sense? So it's all shades of grey. But so long as you're overt about any commission, even if it's not described as a commission, what I hate is where it's described as a marketing expense or something else. So I think if you receive any income whatsoever from any recommendation, referral, or a relationship in any form, my view is you should be transparent. Okay, with this question about we'd add one additional payroll employee under payroll and get a new engagement letter out, we'll bring this under further services as this could change monthly. I think we've dealt with that in terms of it depending on the wording of your retainer. So if you said we are acting for 10 employees, then you'd have to you could do this under further services. But if it started to be a lot, then you'd have to do a new schedule. If your retainer said we will deal with your employees, and then your fee would have to be adjusted.
Would it be okay to say that, Karen?
Pardon?
Would it be okay to say that? So our fees will be adjusted based on
Yeah.
the number of employees
Yeah,
you've
and
got.
as long as it was clear how the fees were charged.
Great. Yeah, that makes sense. Then that's good.
Gosh, I'm scrolling through. They keep moving. Can Karen give an overview of liability caps? If people would like me to do a webinar on liability caps, I'm happy to do that. So perhaps we can follow that up, Danielle.
Yes. Yeah. We'll
right.
think about
that. What's the rule on expiry of a current letter of engagement under a recurring direct debit where the amount billed increases? Does the letter of engagement need to be re-signed by both parties? Well, I think that engagement letters should probably be renewed annually or reviewed annually. If your engagement letter says we've put in the engagement letter the ability for fees to increase, so your fees can be increased without the engagement letter being re-signed, because we've put that provision in the engagement letter. So hopefully that answers that. Tim says OverSuite only produces one engagement letter, even both limited companies accounts and directors' personal self-assessment are both selected as services.
Yes. So with OverSuite, you only ever sorry. So that's because in GoProposal, when you're creating an engagement letter, that engagement letter will just be based on that specific proposal you're creating. So you'll have your director's tax return line and you'll have your general limited company line, and it won't stop you from doing that. So you can create a letter with all those schedules in it. But I suppose from Karen's advice today, and what's really clear is that you just wouldn't be selecting the you could do that for the company, but you would just need to create another engagement letter with the director's tax return line only for the director. I hope that clarifies things. Just let me know in the chat, Tim, if you need me to follow up on that.
Yeah, there's another question for that. I think if it was like myself, I have my own company and I signed an engagement letter for my company, an engagement letter for my own personal tax returns. But I think it would be acceptable where you were. So they're saying, how does we get around this with GoProposal where there is no fee proposal? Have a pound. Have a pound for the fee proposal.
That makes sense.
How do you cope with prospective client and the free interview? If you see a client and you have a free interview, do a full file note. So you've documented every discussion. That's what I do. If I speak to a client, I do a full file note of that discussion. But you don't give advice in that discussion. If you, this is a risk issue. If I see a client to ascertain whether or not it's appropriate for us to act for each other, that discussion is not. I will not give advice in that discussion because I can't give advice until I'm protected by an engagement letter. So that discussion is to explore whether or not it's appropriate to act and what it would cost to act. If you were going to be giving advice, I think you would have to have some agreement. You'd want your liability caps, etc.
Can I just chime in? Sorry, because I'm just seeing Tim Charles's questions.
Yeah.
Tim, I think that you've made a really good point there. Absolutely. I think everyone needs to be aware that this is the process they should be following. I've personally spoken to a lot of people that are doing it that way. So it would be good to understand what the split is now between people doing it the correct way and people issuing a proposal for both the director and the company. Karen, could you just advise us on what we should do? So if there are people that have issued one engagement letter to a company with the director's tax return in it, and had the director authorise the privacy notice and engagement letter for that, what would your advice be now to those people?
If it's a company that has just like myself, that has just the director,
Yeah.
Then
Would you still keep to the same engagement letter?
I think next time round, change it.
Next time, so when it's up for renewal. So if the directors are authorising the privacy notice and the engagement letter, that singular one,
yeah,
then we can just renew that next time.
Change it next time. But my recommendation is that you should have two.
Yeah. Okay. So the recommendation is to have two. You're better off doing it at renewal, and it's just two separate letters. And
yeah, I mean, I'm very practical and I'm pragmatic. My recommendation is you do two. If you've done one and it's just for it's for something like me, where it's the director is the company, so you haven't got two directors.
Yeah.
Then it's wrong, but it's not the end of the world, because he has signed it.
Yeah.
So the one person has signed it, but it is wrong. Except it's wrong, but he has signed it, so he can't really say he hasn't signed it. But next time around, do two.
That's great. Thank you.
Do you have a clause to restrict liability if our client expects us to access their bank account and make authorized payments to suppliers and a mistake causes a loss? Well, the liability cap is there. It's a general liability cap. So if you wanted a specific liability restriction, you could put that in. You could add a restriction in. There's nothing stopping you amending specifically, and you could add that in your covering letter, but there isn't a specific one. Neil. So Neil's saying, do you have a clause to restrict liability if our client expects us to access their bank account and make authorized payments to suppliers and a mistake causes a loss? For example, a payment should be 10,000 but was processed as 100,000. So if that was our mistake, the liability cap would protect us. But if you wanted to add something specifically in, then your covering letter, you could add that in. Your outsourced work is covered. So we have protected. I mean, if you are going to outsource, there's two sides to this question: how are you covered for work you might outsource? So the first point is that you need to make sure you have a proper agreement with the people you outsource. You need to check their PII and you need to check their processes so that you're happy that what is outsourced is done properly. But secondly, we have put the protections into OverSuite in terms of any work is done by somebody on your behalf is covered under the engagement letter. So issue with deceased director and shareholder now inherited by the wife being new shareholder. So this is a legal issue. Should everything be reissued and agreed again? Well, the company is the company. So the company is a legal entity. So the company remains. So it would be sensible to send a new engagement letter to the wife, but the company is still in existence. So because the company is a legal entity, so the company remains. So your engagement remains with the company, but as a matter of practicality and commerciality, it would be sensible to speak to the new owner of the company and say, this is the engagement letter. This is the engagement letter that was in existence, but as you're now the party, here's a new engagement letter to sign. But actually, you've still got a valid engagement letter, but it would make sense to send a new one.
And Karen, just a question there, just to clarify this directors things. There's a few things going off
Yes,
on that.
yeah.
I want to get this all clear. So Karen Hankins has said, just to clarify, so we usually do one proposal and we include all the directors' tax returns, and the other directors then sign the privacy notice and the engagement letter. Did you say, Karen, that the cost could be covered in the company proposal for these tax returns, and then you can do just a separate proposal for the individuals so that they're covered by the separate engagement letter, but those costs are just nil?
You need to have a valid contract. There needs to be consideration, but it could be £1.
Could be £1. Okay. And so you would just have to explain that in the proposal that the company is paying for this, but we just have to charge the £1 just for the consideration.
Yeah. So I mean, I don't know how the nuts and bolts of the OverSuite process.
So how would, without thinking about like no OverSuite, no GoProposal,
Yeah.
how would it work? So if you've got a company and you're engaging that company and they're doing the tax return, they're paying for the tax return for their directors.
Yeah.
How would that work in normal?
Well,
sort of
in
normal?
law,
Yeah,
you'd have two engagements, one with the company, one with the director, and the fee would be split, and then the director would pay for the tax return fee and the company would pay the
right.
accounts fee. What normally happens is that the cost is swallowed up in the company and the director doesn't normally pay, but
That makes sense. So it's just however you want to communicate it. You can put £1 or you can put the cost in the proposal. But if the company's paying for it, you just need to put £1 for that recognition there, Karen.
Yeah. There's quite a lot of questions about OverSuite only produces one engagement letter, even if both limited companies and directors' personal self-assessment are both selected services. There's a lot of questions on this. I think I'm not going to read through all of these. I think that's something that Danielle, you need to take away and
that
we'll
one's
deal
something
with.
we're going to talk about. So really at the moment, as best practice, when you're renewing these clients' fees, what I would recommend doing is you now create two proposals. You create one for the limited company and you get them to sign, the director to sign that. You create a separate one with the director's tax return, get him to authorize that when those proposals are up for renewal. And you can create both engagement letters through OverSuite. It just can't be one letter. You have to just create two proposals. So that would be my recommendation for now. What I'll do is I'll take this away and see how we can build this in this additional intelligence into the system potentially, and have a chat with the developers around that. But no, I think
Sorry, guys.
no, it's fine. You know, it's good to be able to recognize these things. But OverSuite was only ever designed to generate, you know, the one letter when you produce a proposal. It's using it in the correct way, which we've been talking about today, that's important. So you can use OverSuite to generate the tax return letter, and you can use OverSuite to generate the company letter, and you just have to use OverSuite to do that separately, really. That's the point.
But we will get that sorted.
Yeah.
There's a question for you, Danielle. Danielle, can you help and provide advice, recommendations on a special piece of work which expanded, great value for client, but need advice on how we stand on a contingency fee? Person who agreed the extended scope of work has now left the client, so we want to know where we stand before we submit an appropriate bill. I think that's possibly for me.
Karen.
Yeah.
I can have a go, but
so if you've got it in writing, if the person who agreed the extended scope of work had authority for you to do the work, and that's apparent authority or ostensible authority, then you can invoice. So if you want to drop me an email, we can have an offline conversation about that. Patrick says, I want to only use the OverSuite letters. I think they're much better than anything I've done off my own bat. I want to switch off in GP anything I've done myself.
Yep, you can do that.
Yeah,
So
Paul.
again, that's just
Yeah.
about deleting them out from that engagement letter suite page. But let me know if you need any help, Patrick. Jump on the chat support or something.
And then there's a question, payroll. I guess we just add our fees will be adjusted due to reflect the current amount of employees within your payroll each month. I think you need to make it clearer how the fees will be adjusted. So you need to have some explanation somewhere of the amount, so how the fees will be charged. But yes, you can have something in your contract about we'll charge X per employee or X per range of employees, something like that. It's more about the single. I'm not doing anything about the directors because that's going to be done again. Another question about tax protection insurance. Is it possible that tax protection insurance provider could refuse cover? Does the OverSuite engagement letter cover this situation? I'm not sure what you mean there. Is if the question there is, does the engagement letter cover your work in challenging the tax protection insurance, that would depend on whether you put that in or not. So you could put in, we will act for you under the terms of the tax protection insurance that we've obtained for you, and including any ancillary work. So that would depend on the, again, scope of retainer. And again, I can do a talk if people want me to on retainer and what to put in certain scenarios. So that is really a defining your scope of retainer point. And that's the last of the questions.
Amazing. Well, thank you. I really want to thank everyone for joining. There'll be that OverSuite demo on Friday. We do those every Friday. Thank you for everything. We're going to take all this feedback on board. I'll probably follow up with a little video on what I think you should do at the moment with that director's situation, because there's a solution to this in GoProposal that requires sending 2 proposals. I'll send out that temporary solution for you, and then let's see if we can what we can take from that and how we can improve things further. But that's awesome, and especially great just to kind of have you all with us and have Karen with us. So thanks, Karen, as well, for giving up your time for it.
Happy to do that. As I say, if people want any specific training, then get me a shout. Happy to help.
Awesome.
And my coffee's gone cold.
I'm gonna have another one now. Thank you so much, guys. I'm going to close this session off now, and there'll be a recording and everything sent across. Cheers. Bye.
Bye.